Gap shares jumping after reporting earnings and announcing a new CEO at Old Navy. So far, results from the retailers have painted a mixed picture. The biggest of them all, Walmart, disappointing the street. Target impressing. The dollar stores seeing a big divergence. Specialty retailers telling different stories. Capri misses, but Abercrombie beats. And a majority of the companies saw big gains from tariff refunds, propping up some EPS figures. With me now to discuss it all is Dana Telsey, CEO and Chief Research Officer at Telsey Advisory Group. Dana, good to see you. Let's start with the Gap and this transition at Old Navy. I know Old Navy has been a focal point as an underperformer for a little while.
You're right. Hi, Mike. Thank you for having me. First of all, they just reported the numbers. They beat on EPS. The Old Navy brand was weaker than expected with a down 4% comp. Gap held its double-digit comp up 10%. And you know what? Richard Dixon is taking action, making change. Hayo Barbato, the CEO of Old Navy, is being replaced from Michael Francis. Long tenure in retail. He came in as the chief customer officer recently. But meanwhile, the gross margins were better than expected. The guidance went up, and AUR was up at all brands. So you know what? Taking action, AUR up, raise the guidance. On balance, they have work to do at Old Navy, but Gap brand is hanging in there with the big moments.
Yeah, this comes, I guess, last quarter. There was a little bit of a perception of a sort of a fashion mish, merchandising not where it was supposed to be. I mean, do we think that that's taken care of? Are they in a good spot based on the broader trends?
I think Old Navy has work to do. The women's seasonal still missed, and they had increased promotions. So there's work to do at Old Navy. But the health of the business overall remains strong given the fact that they took up guidance and Gap is maintaining their momentum. My theme of legacy modernizing holds given that the legacy brands like what Gap has continues to work.
What are we to make of the split in the market responses to the dollar stores, Dollar General and Dollar Tree, when I guess both in terms of the fundamental numbers more or less came in at what people were looking for?
Yes, but you have to look at what were the stocks doing before the numbers were reported. As a result, I think that was the difference between Dollar General and Dollar Tree, because as you said, it was what the market was looking for, but with one up 7% year-to-date going into the quarterly report, the other down 7% year-to-date going to the quarterly report. One had a stock price that could move higher, one a little bit lower, and overall you had Burlington report today also, better than expected quarter overall, but they saw the lower income consumer, basically, they're watching carefully. Interestingly enough, the stores at Burlington, their stores in lower income areas, outperformed the chain.
Interesting. Yeah, that stock down almost 8% today. And Best Buy also backed off on its results. I don't know if there's anything that people were a little bit dissatisfied with in the quarter, or again, just the market digesting a move recently.
I think market digesting the recent move, you have the turnover and change that's happening in the management team there. But overall, the numbers, frankly, were very solid.
Is there a way to generalize, now that we've seen kind of a critical mass of all these chain retailers having reported about what the operating environment looks like, going into the fall?
I think a couple things. The operating environment going into the fall. On apparel, you need newness. You need fashion. Active footwear, very promotional given the Nike headwinds. When you're thinking about value matters, and I think you're going to see companies continue to get sharper on value. You think about the supermarkets, you look at off-price, they're very sharp in value, but offering better brands. I think going into the back half of the year, marketing definitely matters, picking up new customers matters, and I think we're seeing overall the lower income, frankly, continuing to buy, even in the face of whether it's gasoline prices or other inflationary headwinds. And you're seeing the middle and upper react to innovation. And I think everyone reacts to, whether it's sporting events, everyone's activated by experiences. All
right, we'll see what's next on the path along those lines. Thank you very much, Dana.
Thank
Dana
you.
Telsey.